well, I saw later. I didn't gather the news earlier.
Yeah, apparently was charging his phone or something, or trying to flash his
Why you can't do that on ceiling fan? Ceiling is, the wind there is vicious. You can't do that. I mean, all the cab drivers always tell me like they have to be very, very alert and like put both their hands on the steering while driving on ceiling, because the wind can swerve your car like this, literally like this. You can't do shit like that. You can't pull off stuff like that on that road. That is one of the reasons why they don't allow motorists also. I was asking because I always wondered why two-wheelers are not allowed in ceiling. And one of the drivers told me that is the reason, because the wind is so strong, they will not be able to handle it. It will lead to chaos.
Welcome back everyone to the Money Control live stream. You're watching Markets with Santo and CJ. Well, it looks like we are set for a cautious end to the week ahead of that crucial US jobs market data that is due later in the evening. If you look at the Nifty and Sensex, they are looking for a cautious end and what has been a very volatile sort of a week. Of course, not too much in terms of the directional move, Santo, but we have still seen a lot of volatility under the surface as far as the market is concerned. If you look at all the sectoral indices of NSE, they are all in the red except for the Nifty Media Index, which is barely in the green territory at this point of time. And among the segments, clearly mid caps have taken the beating the most. Small caps actually were faring decently, and large caps, of course, are down about 0.2 to 0.3%. But the Nifty mid cap index is the one that has taken the heaviest loss, Santo, ahead of the beginning of the earnings season next week.
Well, yes, and mid caps, I think whenever you see any steep market correction, it's inevitable that you will see some kind of margin calls and all those things triggering a sharper than usual fall in mid caps. But in this case particularly, I would say that overall the sentiment is fairly positive going into the earnings season.
Yeah, overall, yes.
Because
yes,
last time it was almost a given that the first quarter earnings would disappoint, but this time, and thanks to some of the strong updates reported by many leading companies, I think the general view is that the worst has already been factored in, and things can only get better here on, which to my mind I would say is a bit of sign of little bit of overconfidence, is how I would put it, CJ. That overall market should remain range bound for a while. Now you can see plenty of stock specific moves as the earnings is announced and companies give the forward guidance, but otherwise if we were to focus on the Nifty and the Sensex, probably we could see that being a little range bound at least next month or two.
Yeah, I mean, Santo, if you look at the chart at this point of time, you're seeing a little bit of recovery towards the end of the day. At this point of time, Sensex is just about hovering near the flat lines, and so is the Nifty. So let's wait and see whether we do close in the red, or maybe there is a comeback from the bulls and we end up the day in the green territory. That's it, Santo. A lot of stocks buzzing today, and one from the pharma sector. Now this is one stock that has been your favorite and has been doing very, very well, spectacularly well.
Yeah, overall the sentiment for pharma stocks has changed a bit over the last 1 month, but then let's also not forget that pharma stocks in general had an indifferent run for much of this year. It's only in the last few weeks now that the overall
but not this stock. This stock, I'm pretty sure
Cipla has been inching up steadily. Now what analysts are saying in defense of Cipla is that overall it's the scale up of its complex generic portfolio is going on pretty well. Albuterol revenues have grossed over $100 million. Now the company has 3 inhaler products which is pending approvals with the US FDA, and it's also got another 2 which are in the pipeline at this point in time. Besides that, it's the unlocking of its peptides injectable pipeline is also underway. 1 product has been launched and 4 more are pending approval at this stage, and it's generally estimated IIFL is of the view that each of these injectable peptides has the potential for about $30 to $50 million in revenues from FY 24-25 onwards, and that's probably one of the reasons you're seeing that investors are once again warming up to the stock. Let's not forget, again, Cipla has been delivering consistent performance in its India business also. Now the launch momentum in US is pretty strong at this point in time, and then you have the consistently performing India business as well.
Yeah.
So which then seems to make a case for Cipla at this point, CJ.
Yeah, I mean, Santo, I think the India business is, I think, probably one of the primary reasons why the company or the stock has seen the sort of performance it has seen over the past year. Yes, it is the second largest player. It is not the largest player in India. But if you look at, almost 3 years ago, there was an issue with the trade channels with respect to Cipla, and the company had to restructure a bit of its distribution network. But since then, the comeback that the India business has made has been very spectacular. But, when it comes to the US business, Santo, everything can be going great for you. But just one regulatory, inspection can derail all of your plans, and nobody knows that better than Lupin. And in fact, also Cipla, if you jog back your memory to the days when its Goa plant came under the US FDA scanner. So for me, I think going ahead, that regulatory caution probably is required on Cipla, because as much as the company can plan to launch products, if the facilities do not keep up with the upgraded standards of US FDA, it could lead to issues. And yeah, please do continue.
No, I think that is, that's part of the overall risk, you would.
And that is why I would suggest a little bit of caution. I think if you're trying to look at Cipla and thinking that, it deserves blue sky valuation, I don't think that would be the approach to take.
Indoor
with a
plant
pharma
that
stock
has come out of it, the inspection, and that issue at least is
true. But some of the other plants, Santo, because USFDA inspections happen on a 2-year basis. Most inspections happen on a 2-year basis, and then there are inspections which are particular to a particular product. Now, because Cipla is into a lot of limited launches products, and these are very high end, very complex products, and because these are complex products, they require specific site inspections. Now, if that were to go here and there could be issues with respect to Cipla's plant. But of course, we are not suggesting, or I am not suggesting that could happen, but that is a risk that investors should be aware of when you're looking at Cipla. And apart from that, I think from a general sector standpoint also, Santo, I think given that the sector has been performing well, as you said, in the past 3-4 weeks, when the market was going through a downturn, I think if the market sees an upswing, probably this is one sector which will be underperforming the first, because you will see a lot of cautious money move out, and because of that you could see some bit of profit booking creeping into Cipla going ahead.
That's where I make an even stronger case for Cipla, because I don't think the downturn in the market is going away easily anytime soon.
Oh well, that is a different topic altogether, Santo. Let's move on, and the first stock on my radar today is again from the jewelry space. I spoke about Titan in the morning, and the second stock today is Kalyan Jewellers, which came out with a very strong set of Q2 update for markets, and the stock has been rewarded also by the market with almost a 4% up move today. If you look at the overall business, overall sales grew more than 20%, Santo, on a year-on-year basis. But if you look at the India business specifically, that also registered a growth of more than 14% growth in sales. So clearly the sales momentum continues. The company has indicated a footfalls momentum has actually increased on a sequential basis, on a quarter-on-quarter basis, which is a very, very good sign as far as demand is concerned going ahead. But the important bit, Santo, which I want to put your focus on to, is the fact that the company has now said that they're going to ramp up the new strategy in terms of expanding its store base. And how they're doing it is that they are adopting a franchise model. They had opened up a few stores, almost 5 stores now, as a tentative, project, or as a sample, and they realized that the reaction from the consumers has been very, very strong. So now they have decided that this is a model that they should be pursuing going ahead, and therefore in the future they're going to ramp up such franchise distribution stores going ahead into India. And mind you, because this is an asset-light model, clearly it will be much more margin accretive than, say, opening your own stores and owning them, like, say, for example, a D-Mart does. Of course, each business model has its pros and cons, but clearly Kalyan Jewellers believes that this model will work for them, and I think this is a stock to watch out for going
Interesting
ahead.
business model there. And also the CJ, the point you were making early in the day about shift from unorganized to increasingly to organized players, that Kalyan Jewellers too stands to benefit from that. My only quibble here at this point is that if you were to look for the last 4 years annual revenues, that's again been within a range, unless it now breaks out. We did see some signs of that in the June quarter, and if you see, the entire re-rating in the stock has begun from somewhere in the last week of June. Maybe market already had a whiff of the strong first quarter performance, and as the second quarter update shows, maybe the momentum is likely to continue there also. And let's not forget, there's the festive season and the wedding season, the next 2 quarters, which then definitely are positive for jewelry companies like Kalyan Jewellers. So maybe the momentum will continue, although at this point in time it looks like the stock is more a favorite of the HNIs. We're not seeing any institutional interest picking up in the stock yet. It had gone through a slump some time back.
Yeah, I think a lot of institutional, booked their profits during that slump after the IPO.
It still needs to regain favor with institutional, but well, the stock price is on a roll, and as they say, as the saying goes in the market, that ultimately bhav bhagwan che.
Yeah, bhav bhagwan che. Absolutely.
Well, next stock on our watch list is UPL. Again, the stock has been doing fairly well at this point in time. It's been among one of the stocks which has managed to hold ground in a lackluster market, and in fact the company's decision to raise the guidance during the first quarter, that itself has really set investors warming up to the stock, and basically now the company is set to maintain its high growth momentum despite the drought in Europe. That's something that you had been flagging last time also, but now analysts are of the view that both its US as well as India sales are expected to be quite strong, and that will largely offset any weakness that the company might see in Europe. And let's not forget, crop prices have been fairly favorable to farmers in general, which then makes a strong case for agrochemical companies across the board.
Well, clearly, Santo, I think the Latin America business is the one that has been able to offset the weakness that we are seeing in Eastern European and Southern European business of UPL. Let's not forget that UPL also has a very good amount of exposure to Russia and China. Now, China has come out of a major drought as well. So, I am not so sure whether how the global picture will look for UPL going ahead, because it seems like adverse weather conditions which are happening at a more frequent pace could make earnings of the company much more volatile. At this point of time, it is clearly dependent on the Latin American business to drive earnings growth, and that is probably one of the reasons why the company had also raised their guidance in Q1. But the another risk that Santo will now probably be in focus in Q2 is the cross-currency headwinds. Because UPL has businesses in so many geographies, it tends to face cross-currency headwinds during periods of dollar strength. So because of the weakness probably you have seen in the Brazilian real or the Chinese yuan and as well as the Indian rupee, we'll have to see net whether it is adding to the margins of the company or whether it will probably shrink the margins of the company going ahead. So that is something that we would like more clarity from the management when the Q2 earnings come up. And apart from that, one interesting thing that I noticed, Santo, is that over the past 4 or 5 years, especially after the major acquisition of the chemical company of about $4 billion that the company had done a few years ago, UPL had indicated that it was on a downward trajectory as far as its debt is concerned, especially net debt. But in Q1, you saw a major spike not only in gross debt but as well as in net debt, and that was largely down to working capital issues as well as holding high inventory in its Latin American operations. So I would be very interested to see whether in Q2 they reduce their debt on a sequential basis, or does that debt level sustain and probably goes up even more because of higher working capital costs that the company is working with. So for me, I think this is something that investors ought to keep in mind, even though the headline numbers seem to be looking very, very sweet as of this moment. Well, the next stock and last stock on my radar today is the Dabur India. Now, I'm fairly cautious on Dabur India, largely because of the update that the company has given Santo for the second quarter. And market was so hyped about the fact that margins will be improving, the commentary will get better, but clearly none of that has come out from Dabur's update. If you look at gross margin, the company said that its gross margin is going to be under pressure in Q2 and could see a decline of almost more than 100 basis points actually in Q2 alone. So that is something of concern. Apart from that, again, because of having business in many geographies such as Egypt, Turkey and other emerging markets, Dabur is also going to face cross-currency headwinds, and that could also have a negative effect on margins going ahead. And in general also, Santo, I think Dabur's India growth also, or volume growth also, has been much more muted than compared to sector leaders such as NHUL. And I think that is why investors probably will prefer the stock less compared to, say, a Britannia or an HUL right now.
Well, the part about the weak second quarter update. Now, in the first quarter update of earnings commentary itself, the management had said that the demand environment would remain weak for some time. And Dabur really has not been a big outperformer in the FMCG space. It's been struggling through the year. So, to a large extent, I guess, while there may have been expectations, the market was fairly prepared, I guess, for what has come. Now, what the company is trying to do probably to mitigate the weak demand thing is, it's again trying to drive growth through new product development, distribution expansion and investment behind its existing brands. And there were some positives in the first quarter numbers also. If you see the healthcare part of the portfolio, that is beginning to contribute fairly significantly, and also in the food business it's been scaling up pretty well. It's expected to clock about 5 billion rupees this year, and you saw that almost a doubling of revenues in its juice fruit juice business as well. So there are positives there at this point in time, but when you put the picture as a whole together at this point, it's not looking very pretty.
Yeah, absolutely, absolutely, Santo. I think that is the major concern, and I think that is one of the reasons why I would probably still stay cautious. Although I think FMCG space in general is also facing a little bit of caution from the market, especially with respect to raw material prices, because that theory around that margins will improve is not. It does not seem to be working to the script at this point of time.
Well, and the last stock on a watch list this afternoon is Dr. Reddys. Again, pharma stocks in general are having a good time. Dr. Reddys is also one of the stocks. Now, LIC has increased its stake in the company recently.
Value hunting, huh? Yes. LIC is out there value hunting.
Significantly.
But who is value hunting on LIC then, Santo?
Yeah, that's the whole, that's the pity. Now, increase in stake by LIC to about 7.7%. Besides that, the new launches in complex generic will offset pricing pressure according to analysts tracking the company, and besides you also have a booster coming from the launch of generic Revlimid, the impact of which will be felt in the second half of this year. So these are some of the positives for Dr. Reddy at this point.
Well, Santo, for me, I think the exposure to the Eastern European business, which includes Russia, I think that is something that probably could weigh on Dr. Reddy's performance in the second quarter. Also, let's not forget Dr. Reddy's also has a large chunk of business in US, which is that portfolio is also undergoing price erosion across the pharma board. So I think the export business probably will be under pressure in the second quarter. But a lot of people have been talking about that the India business could be able to offset that. The company after the Wokhard India business acquisition, it has been trying to increase its footprint in the India business. But if you look at the September numbers, Santo, India business sales grew only 5% for Dr. Reddy's. The entire market grew at 10%. So clearly, even in the India business, Dr. Reddy's is at this point of time underperforming and finding it hard to match the growth of the industry, and that is why probably if you are looking at a pecking order in pharma, I think Cipla would probably be the topmost, and then maybe you could look at some of the API manufacturer instead of the formulation company like Dr. Reddy's at this point.
Well, Dr. Reddy's outlook for the US market, and mainly again the strategy here is to increase the number of launches. It's got about 25 launches lined up for this year also. To some extent, pricing pressure has been the biggest concern for most pharma companies, I take it, but maybe the strategy of having more product launches probably could pay off.
Yeah, I mean that is the only way you can offset that margin pressure, by keep on launching newer and newer products, and therefore the base business continues to reduce, and therefore it hits your margin much less than it does when you don't have enough products in the market.
Well, and a quick look at the market at this point in time, and indices have managed to trim most of the losses.
Yeah, but we are still quite weak, Santo. It looks like.
Yeah, weak, but not so bad as it was early at some point midday. Nifty down by about 20 points at 17,310. Sensex is also flattish at this point, and this despite the weakness in the rupee, and that's the surprising part. For the equity investors, it's as if the currency market just does
not matter. Yeah, I know. I mean, our forex brothers must be feeling so bad being ignored by us at this point of time. But if you look at some of the causes for the recovery, Santo, is clearly the private banks. I think there's been a decent recovery in private banks late in the session, and that is probably leading or helping the benchmark indices trim some of the losses. Also, the real estate companies, they are seeing a little bit of buying at this point of time, at least the major ones, and that is why you have seen the Nifty Realty Index also turn into the green territory and is now higher by about 0.3%. But overall, if you look at the small cap space, clearly now outperforming. I think the Nifty Small Cap 100 Index is now in the green territory firmly and is higher by about 0.2%, Santo.
Well, and what are the key things that we're keeping an eye out for?
Well, Santo, the biggest one is, of course, the non-farm payrolls data for the month of September that will be released in the US later in the evening. So that will be, of course, the most important data point that may dictate how markets behave, global markets behave next week. Apart from that, of course, the Q2 earnings is upon us. Next week, TCS will be kickstarting the Q2 earnings on Monday, then followed by HCL Tech on Wednesday, and then followed by Infosys on Thursday. So clearly, Santo, a big week ahead for earnings, especially the IT sector. And now we are into the the grind, as they say it.
Well, so markets will close lower and well, tough luck there, CJ. You would have enjoyed your upcoming holidays a little better if the
Absolutely. I think, yeah, it's a somber note to say farewell for the time being, a temporary farewell. I'll probably not be available. You will not be seeing me for the next 3 shows, but after that I'll be back, and hopefully the bulls will be back.
Maybe I'll try to convince more people to see the market from my point of view.
I'm
CJ,
sure,
like
Santo.
you
I'm
keep
sure,
doing.
but I really doubt. I think your endeavors might lead you to disappointment.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Please do remember to post your feedback in the comment section below, and have a great weekend ahead.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen, and stay tuned to moneycontrol.com and download the Money Control app for all your financial news. We'll see you again. Actually, Santo will see you again on Monday morning. But till then, have a great day and a great weekend ahead.
Where are you going, man? Delhi?
No, Jaipur.
Good.
Friends. No, it's not actually holiday. It's actually friends Sagai. I have to go.
Don't qualify things so much also. And what about Simba?
Simba is going to stay on his own.
3 days he'll stay on his own.
Yeah, 3-4 days.
What?
There's no other option. But he has done it in the past, so it's fine.
Did you tell him that you're going for 4 days?
Yeah.